You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit Verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Wait a minute. Are we done with the previous hour already?
That's it.
That went really fast. I guess it's time for the second hour. Hi, all. I'm Don. That's Tom. Welcome to Talking Real Money. This is the show that hopes to help you understand your money a lot better than you have, to make investing sensible, simple, sane, a lot easier than it typically is with most of the folks out there. We want to cut through all the confusion and the garbage and the junk and the mumbo jumbo and the complication and really get you on track to a better future. And it's really easy. You're going to be surprised at how easy it is, but you have to call if you have a specific question or you need some specific help or general help. 855-935-TALK is our phone number. That's 855-935-8255. You can call that during the show on Saturdays from noon to 2 Pacific time, or you can call anytime and leave a question on our service, and we'll answer those on future podcasts. So give us a call, 855-935-TALK, or
chat. We've got Joyce right now waiting to chat. No, he's shaking his head.
Nobody's going to chat.
It was your idea.
I know.
No,
I thought it was
a person did last week.
I thought it was a good thing to put there.
I still think
if
it is.
People have questions
as usual.
for us, they can and you can always go to the chat at talkingrealmoney.com or the all-new Vestory.com.
Oh, it's beautiful. And by the way, what has made you a lot of money this year?
I don't know. What? Not the stock market. No.
Amazon stock.
Well, some stock.
Oh, yeah. Lumber futures.
Yeah. Okay. That's like saying oil
85%, up 85% year to date. But okay, a little more mainstream. I know many of you don't invest in lumber futures. You should have, but you don't.
You shouldn't have. You see, people are going to take you seriously.
That was a joke.
But you see, people are going to. You're a radio star.
Don't.
Remember that guy said you were a financial expert.
Expert. That I said depends on your definition. Okay, so but the reality is you've been believing the pundits. You've been believing that with the crisis you should be investing in that shiny object that makes you feel so good when times look tough, called
diamonds are forever.
Gold.
Oh, gold.
Gold. See, people are going to go invest in diamonds now.
I know, it's my fault. It's always my fault.
Anyway, you people, that didn't come out right.
You people, that sounds really condescending.
Investors have thrown $40 billion with a B dollars at gold exchange traded funds. $40 billion this year. And gold is up somewhere about 20%. Still, by the way, not quite back to its all-time record high of whatever it was in 2011. I guess you can thank Mr. Stansbury for that.
It was like almost $1,900 an ounce.
Yeah, and now it's trading at like $1,800.
$1,800 an ounce, yeah. Looking right at it.
Gold. I know you're a huge fan.
1889 was its high. Huge fan. Yeah, no. As a matter of fact, I honestly think that gold is one of the dumbest investments out there. I really, truly do, as an investment. I own a piece of gold. I'm looking at it. It's on my third finger of my left hand.
Ring finger?
Yeah. It's got gold.
It doesn't look like it'll ever come off either, by the way. So.
Oh, no, it does.
Don't.
I haven't gained that much weight.
Please.
What was I going to say? Oh, anyway, I don't own gold. I've never owned gold. And by the way, just full disclosure, I never will own gold as an investment, ever. Never will own
it. The hard metal, you're never going to take.
Right. I'm never going to go out and
put it
buy
in your basement and lock it up.
Buy bullion or some rare coins and stick them in a safe. No, never.
Because the way we invest, you own gold mining companies. You own gold production companies, if you will.
Yeah,
you do. And you don't run it by the bullion.
Because the only people who make money in gold are the people who drag it out of the ground or turn it into something else.
Bingo.
It's not the people who put their money in gold itself. They do not make money. As a matter of fact, if you go back in 2010, gold was $1,200 an ounce. In 2017, it was at $1,200 an ounce. In 2019, it was $1,200 and change an ounce. Now it's at $1,800, but this is what gold does. It goes up and down again. It is almost, you think about stocks being a zero-sum game. They go down as much as they go up. Well, gold goes down as much as it goes up.
It's a trade.
It's speculation.
It's a speculation. Right. It is. We had somebody call us, I think, a few months ago, right? Say, should I move it all into silver?
Yeah, no. Silver's been even worse, by the way. Silver, when gold has been rising, silver has been pretty steadily falling.
Silver's trading at 19 something.
Yeah, I mean, it's up a little bit, but actually there's an old time ratio that says gold should be 16 times silver. It used to be. So if that was the case, then today
gold should be 16.
If gold should be 16 times more than silver, so silver should be in like the $120 range, and instead it's at $19. I'll tell you more about this in a minute. I want to explain something about the precious metals markets, just generally. 855-935-TALK is our number. 855-935-8255. Give us a call. It's free and it's really easy, and it's about your life.
Tom and Don are talking real money.
We don't believe in seat-of-your-pants investing. We believe investing should be based on solid science, on academic research. That's why on July 29th, we'll be hosting a brand new class, The New Science of Real Investing, at 8 a.m. via Zoom. Get your tickets right now at TalkingRealMoney.com. Just click on the New Events button or the Events button and reserve your place. Go to TalkingRealMoney.com and make sure you're there to learn the science of real investing in our next online Zoom class. Go to TalkingRealMoney.com, click on the Events button.
For your real life and real future, Tom and Don are talking real money.
Oh, hi. Welcome back. I'm Don. That's Tom. Our phone number is 855-935-TALK, 855-935-8255. And one other little thing about gold. I could tell you a lot of other things about gold. One of the things I could tell you about gold is that gold today really doesn't buy any more of any particular commodity than it did 2,000 years ago. Gold has about the same purchasing power as it did.
It's kept up with inflation.
It's kept up with inflation. That's all it's done. But gold is only valuable because it is rare. It is a rare mineral on Earth. There is not a lot of gold. It's hard to get. There's a semi-limited supply. But what happens? What would happen if suddenly NASA and Elon Musk and Jeff Bezos all flew out to this asteroid?
I think now it's the other way around, Elon Musk and NASA. But okay, go ahead.
But they flew out to this asteroid. It's called, it even has a name, 16 Psyche. It has enough gold in it to give everyone on Earth at current value $93 billion worth of gold. That's how much gold is in that asteroid.
Then the crisis is over. We all got a lot of money.
Right. But if everybody had 93 billion, wouldn't that be the new zero? Wouldn't that be the new?
And by the way, does Jeff Bezos get it? Because he's worth like 188 billion.
So he's worth now 188 billion more than the rest of us still. You know? You see where that puts us?
Yeah, exactly.
So, we're
kidding,
investing.
but don't. Gold is not
stupid investment.
An investment. It truly is a speculation.
Yep. 855-935-TALK. That's our phone number. Call. We'd love to talk with you. Gene, you're next. Welcome to Talking Real Money.
Hi, Gene.
Well, good afternoon, gentlemen. I had a question about fuel injection versus carburation. I was wondering if you could help me with that.
Wait. No, Gene. All the car talks. I don't even think they'd invented fuel injection. They're all now, the ones I've heard, they're all carburetors. I'm going, who has a carburetor in a car?
Nobody.
Hey, listen, I got a question. So our retirement portfolios are structured basically in the same way that I can't remember the name of that class that you put on, but I went into one of your classes. And so we're in Vanguard.
Retire Meet?
There have been so many of them, we can't keep up either.
No, it wasn't. I've been to one of those too, but no, it was a separate class up at Linwood.
That's probably the science of real investing.
It was a great class. I really valued it and got great stuff out of it. So our portfolios are structured, kind of the way you talked about in that class. And so therefore, we've got, I think we're about 40% in bonds and then stocks, and then about 10% in a REIT. This is all at Vanguard. And I've just been thinking lately with all the craziness that's been going on with, we've been doing okay primarily because of the bond portion of our portfolio, but interest rates can only go up. It just
Gene.
Gene, wait, step back.
Estate, everybody is defaulting on their mortgages and not paying rent to their commercial landlords, and it seems like REITs also have a high level of risk right now. What do you guys think?
Yeah, I'm feeling a little deja vu-ish. I got a bad case of the deja flu or something. For one, that's why you have bonds in your portfolio, to balance out the stocks, which haven't done very well. For how many years now have the experts been predicting that interest rates were going to go up?
I was going to look at that. I think it's almost
been
10
about
years.
10 years now.
Every single year they say rates
have to go up.
Yeah. And I just looked today, a 15-year fixed mortgage you can get for 2.69. Does that sound like it's gone up a whole lot? No, it's gone down. Well, the Fed has basically said they're going to keep rates where they are for a couple of years. I think if you read what they actually say.
And in reality, though, Gene, that doesn't matter if you follow the strategy that we believe. And that strategy is you don't ever own long-term bonds. Because, yes, with long-term bonds, you're locked in for up to 30 years at today's rates. Whereas with a short intermediate portfolio, you've got bonds all the time coming due and reinvesting into the new, currently lower rates, but someday higher.
And we could get you into a nice 90-year Argentinian bond if you really want to hold a long bond. And then to the REITs just for a moment. Real estate. I
swear he's holding out for a trip to Tierra del Fuego from the Argentinians or something.
They're going to give me a huge commission if I can sell those. The REITs, Real Estate Investment Trust. Now, REITs, remember, because you said something about people defaulting on their mortgages. REITs are commercial real estate. Do I think commercial real estate's headed for a change? I do.
But
what it is going to mean, I don't know. But remember, all the people that trade those publicly traded REITs, they've been thinking about this since, mid-March, and they've been trading all that. So that's what we call baked into the cake. It's in the price today. What has to happen is Monday find out, it turns out that all these corporations are never going to pay for their office space again. Well, that could change the price of REITs. REITs have been an important part of a diversified portfolio for a very long time. I don't expect that to change. Will there be some variations because of what the future looks like day by day? Absolutely.
There is an inherent problem, Gene, in trying to react to what the economy or the markets have done. You cannot do that. The only way you can be successful in making changes is if you successfully predict something that the markets did not anticipate. And that's called getting lucky.
Okay.
Gene?
Very good. Thank you. Thank you both.
You're very welcome. Yeah. Thanks for the call.
By the way, the other part of that, thank you, Gene, for your call. Your portfolio, Don,
mine,
you, everybody. Yeah.
Mine.
It should be about you.
Yes.
We say this often.
Yes.
People really internalize. It's not about the market. It's not about the COVID. It's about you, what you're trying to achieve, how much volatility you can take, and how soon until you need the money. That is how you're constructed. The amount of bonds or stocks or REITs has nothing to do with what's going on in the world, because as I said, all those things, they're already factored into the price of bond funds and stock funds. That stuff's already there.
And the reason that
You don't know what's next.
reason that we want you to be in bonds and real estate and small value and large value and large growth and small growth and mid caps and all these things. The reason we
International.
want you to be in those things is just for the reason I stated. We do not know what the future outliers will be. We did not know in the 2000s that the 2000 teens would not be good for value. We did not know that. We could not have possibly known that. Therefore, we stayed in value. But the thing is when the value didn't do well, the growth stocks that hadn't done well in the previous decade did very well to pick up the slack. You have to be ready to settle for average. That's what you're going to get. You're going to get dull, boring average. You're not always going to win, and you're not always going to lose.
Tom and Don are talking real money.
You've heard that about 99% of all financial advisors are not always required to act in your best interest. You've probably been pitched financial products by all manner of friends and relatives, and the investing you have done is probably a hodgepodge of ill-fitting pieces that are doing little to provide the financial security you need. If you're looking for a 100% pure fiduciary, and we'll put that in writing, low-cost, fee-only advisor who always puts you first, give Vestory a call at 800-386-3004. That's 800-386-3004, or visit us online at Vestory, VESTORY.com.
Your guides to a really great financial future. Tom and Don are talking real money.
The problem is that we as investors do so many things wrong that if we can just change some of our negative behaviors, just a few negative behaviors, you don't even have to be right. You just have to stop being wrong. And by wrong, we mean chasing after the hot newsletter, the hot predictions, the hot future prognostications. By wrong, we mean trying to determine whether you should be in fixed income today as opposed to stocks or vice versa. We can make an argument against both of them. Well, then where does that put you if both are bad? If you stop doing the bad stuff, you're going to be a whole lot better off when it comes to writing this volatility, this craziness out. 855-935-TALK is our phone number, 855-935-8255. Gold is not the answer. Stock picking is not the answer. Market timing is not the answer. Trading is not the answer. Cerise?
Love.
Cerise?
Is it love?
What is cerise? It's in your notes.
Well, then let me look here.
I see it there. I'm looking through your notes on the show, and I'm going, cash in cerise? It was curious.
Yeah, that's a spell check problem. No, that was my bad typing.
Cash in a crisis.
Crisis, because this has come up a lot. People say, I'm going to need, my income's gone down, whatever it is, where to come up with cash. And the article that I'd read that I found fascinating, I didn't know this. Did you know? If you're an artist and you know you're going to have a certain amount of royalties on whatever song, or you have a catalog, you can go borrow against that.
Mm-hmm. It's an asset.
Yeah, I didn't know that.
Yeah.
So the point I was trying to make when it came to this was sometimes in these difficult moments, you need to look at your assets to say, maybe you should go look at how to borrow against. For example, a lot of people listening to us have a lot of money in home equity, right?
Mm-hmm. Yeah.
The home prices have gone up a lot in the last 15 years. It might make sense to go get a HELOC, for example, because here's what I see. I see people saying, oh, well, I'll go get it out of my IRA. Well, not realizing that if you go take the money out of your IRA, you're going to pay tax on that.
At your income rate.
Correct. Thank you. Versus going and borrowing it against your home in a HELOC. And we're not fans of getting into debt, but sometimes it makes sense to do that.
However,
as an alternative.
As an alternative to that alternative, you should probably be looking at your mortgage anyway. Because as we just mentioned, the 15-year rate, I mean, I thought I did so well. I locked in a refi at 2.75 or something.
Yeah.
And I thought, now it's below that.
I know.
But you might want to.
Rates have to go up.
Yeah. Yeah. You might want to look into doing that, though, because if you do have a ton of equity and you're running short in retirement, that may be a way to take some cash out or if you're in a crisis right now with your job, which a lot of people are, or some people are just wearing lovely coats of cerise and and don't know how to.
Or they want to be real estate barons like you. They want to have Florida. They want to have Virginia. They want to have the silver bullet. I don't know all the real estate you own. It's so pervasive. It's so big. It's hard to keep track of it all.
Well, I'm just going to go get myself a cerise coat now.
I'm never going to live this.
Do you know what cerise is?
I don't even know. No,
it's a bright, deep red. So
okay. Well, that can help.
If you're in the red,
there you go.
Use your real estate to make money.
You.
Oh, I
knew you
out
could
of it.
fix this. Totally. Thank you very much.
He owes me big.
Yeah, and make sure you tell Cerise thank you for mentioning her on the show. She'll be very happy for that.
In Francais, it means cherry. Get it? Cherry, red, cerise.
Right. Make sure. Okay. Cherry. Yeah, got it. Okay, thank you.
You can't speak French.
Anything else in my notes that I got wrong here?
Let's see. You wanted to talk about divorce? Oh, no, too depressing. We do want to talk about the 401k rollover thing, though.
We'll do that in the next.
Oh, yeah. We got to get to that one. That's really important in this environment, although we do have. Oh, I think we have a caller. We'll have to do them first, and then we'll do the 401 thing, okay?
Yeah, because you want to do those rollovers very carefully so there's no potential for fraud.
I didn't know that people could do stuff like that until you told me. There's fraud out there. Can you believe there's fraud? Financial fraud?
I'm seeing red already.
Yeah. Charisse. 855-935-TALK. That's our number.
Tom and Don are talking real money.
Did you know I wrote a book? Yeah, about 10 years ago, I wrote a book about investing. Financial Physics, with an F, How Money and Investing Really Work. It's a short read. It's a really easy read because, well, as you know, investing is way too easy to be this complicated. And it's been on sale for a long time at Amazon. I updated it in 2018 to a new version. But if you don't want to buy it, you can go buy it at Amazon. It's $10. But if you don't want to buy it, if you want it free, well, you can get it free two ways. One, you can get a PDF copy by going to talkingrealmoney.com/free. talkingrealmoney.com/free. If you don't put in the /free, you can't find it. The other way is if you have an iDevice, like an iPhone or an iPad or a Mac, you can go get an interactive version of the book, a special edition that I made that's actually interactive, that's got videos and motion and things going on, and that's also free. Just look for Financial Physics, FYSICS, in the Apple Bookstore or Apple Books or whatever they call it now. Or go to talkingrealmoney.com/free, talkingrealmoney.com/free. And I guarantee you'll enjoy the PDF or the iBook or your money back. Check it out, talkingrealmoney.com/free.
Reality radio for a really great future. We're talking real money.
Because real money is really important to your real life, and you need it every day, and you're going to need it in the future. You need a plan for that stuff. And don't let people lead you astray. Call us first at 855-935-TALK, 855-935-8255. I'm getting hoarse. My voice sounds raspy.
That would be really an occupational hazard.
In my business, yeah. I haven't even done this week's lit reading podcast.
Whew. Lip reading is very hard too on a podcast.
Lit.
Okay.
I'm doing a great.
Tricky.
I found a Philip K. Dick story that's in the public domain. It's really scary.
Just read.
It's really good. I'm going to do that one.
Great writer.
Yeah, he's a great writer. 855-93. It'll be the newest story I've ever read on lit reading. All of them are like pre-1926
years old.
Yeah. 855-935-TALK. Give us a call. It's free, and it's really, really easy to do. And we're generally nice to most people except for a couple.
Most.
And Mike, you're up next. I'm nicer than Tom is. Welcome to Talking Real Money. He gets really hard on people. Hi, Mike.
Mike, how are we doing?
Hey, gentlemen. How you doing?
Good.
First time I've ever listened to you guys. I really enjoy your show.
Thank you. No, don't stop, okay?
My question was, I was thinking of doing this the last few years, but before I really get into it, I wanted to get your opinion about investing in tax liens, certificates, or deeds. What do you think about it?
You want me to do that one?
Yeah, I kind of.
One of my favorite places. Yeah.
Now's your chance to be mean to somebody.
No, I'm not going to be mean. I'm not going to be mean. I'm just going to tell you that they're not all they're cracked up to be. Usually, if you are going to let your property go to a tax lien sale, it means a few things, particularly in a really bad economy. It's a way for people to borrow money from you at a reasonable interest rate. You can make money on it, but sometimes getting the house can be a really, really bad deal. And some people walk away from houses. You've got to, it almost, the people I know, and I know many of them who've been very successful at tax lien sales, but they don't do it as a passive investment. They do it very actively, and it's a business. They run it like a business. They do their due diligence on every property before they go down to the courthouse. And they understand that.
I was just going to say, I was not interested in someone getting a house, but just the 18 or 24%, depending on which.
Well, but remember that is it. It is that you're going up against professionals who do this for a living, okay? And it is a bidding process. You bid against other people for the interest rate. So if an investor knows that this is a very nice piece of property, that they are very likely to get paid back, they are going to bid you down on your interest rate. And you need to be prepared as a businessman, knowing the properties as well as they do. What I would probably do is go to a tax sale and watch and listen and learn for a couple of months.
And let me add something to that. In today's Wall Street Journal, you may or may not be a subscriber. It'd be worth it just to get this one article. Today, big article talking about these companies that have gone out and done exactly this, really since the financial crisis. Yep. And they have spent hundreds of millions of dollars because what they've done is turned a lot of these homes into rentals and made a lot of money. But they spend the money. They get the time for the research. These are real pros. Like anything, by the way, you said turn it into a job. I mean, you could do the same thing with flipping homes, right? I mean,
anything could be a job.
It could be a job where you really get into it. You understand how it all works instead of just saying, because what I heard you saying was, I just want to sign up for the 18 to 24%. Me too, by the way. Sign me up for that because it sounds so easy. The challenge is it generally is not.
Yeah, and the reality is, and this is directly from an organization called the National Tax Lien Association. It's a nonprofit. The average rate for tax liens purchased at auction is 3 to 5%, not 16. You're not going to get it. So I would skip it and stick with more traditional investments. 855-935-TALK. Give us a call. Larry, it's your turn. Welcome to Talking Real Money.
Thank you. I have a question about Vanguard Total International Stock Index Fund. Okay. I purchased this a little over 2 years ago, and it's still below what I purchased it for. Should I sell it?
Do you like buying things high and selling them low? If so, we have some other really great investments.
Oh, yeah, that's the only thing I do in life. That's my practice. But I just got to look at it.
All right, that was a little bit of, yeah.
Yeah.
No, I apologize for being a smart guy.
And this is what Tom does to people. He makes them feel bad.
I didn't mean to do that.
Yeah, I'm going to, you know what? I'm just going to answer it nicely after the break.
Okay.
I'm just going to give the man a nice answer, not a smart aleck answer, not a flippant answer, no sarcasm, no, the hard truth. So stick around there for a minute, Larry. We're going to tell you all about mutual funds and diversification and that kind of cool stuff. 855-935-TALK is the number.
Tom and Don are talking real money.
We don't believe in seat-of-your-pants investing. We believe investing should be based on solid science, on academic research. That's why on July 29th, we'll be hosting a brand new class, The New Science of Real Investing, at 8 a.m. via Zoom. Get your tickets right now at TalkingRealMoney.com. Just click on the New Events button or the Events button and reserve your place. Go to TalkingRealMoney.com and make sure you're there to learn the science of real investing in our next online Zoom class. Go to TalkingRealMoney.com, click on the Events button.
For your real life and real future, Tom and Don are talking real money.
855-935-TALK is our phone number if you still have the courage to call us after Tom's comments.
And now, the rest of the story.
He has been pilloried, and will, as soon as we can get the boat out into Lake Washington, he will be keel-hauled.
I prefer Chelan. Would that be better? Because the sun it's just warm there.
The water's not warm. It's Chelan.
No, the water's not warm. The water's not warm, but the sun will be out, and it will be above 80
You're
degrees.
going to be keel-hauled. You won't know about the sun.
I have. That's true. Not at least for what they usually put you under for. Like, I didn't even know until I watched that show on Pirates how bad that was.
Oh
my goodness! That's
no. I forgot all about that. That was really upsetting.
Man, that was. Oh, they bring that guy back to the surface, like.
And then they did it again.
No, thank you.
855-935-TALK. That's our phone number. We're talking to Larry, and I just apologized to Larry for Tom.
Sorry, Larry. Yeah.
And Larry, here's the deal. Okay. Let me explain something to you. We, again, believe in diversification because we know that some segments of the market will do incredibly well, and then they will fail to do well. And we also have been in this business long enough and have studied this market long enough, the markets and how they work, to know that you will never be able to get in at the right time and get out at the right time. You're always going to be, at times, getting in at the wrong time. We just don't want you to get out at the wrong time and double your error. The other thing is, if you had just invested in U.S. stocks in the 2000s, between 2000 and 2010, you would have lost money. If you had this international portfolio mixed with that 50-50, you would have taken that negative 1% return and turned it into almost a positive 7% average annual return. You must have this fund if it's part of a diversified portfolio.
Okay, well, I understand what you said. And I do have some other funds. But, bottom line is that I've had this for over 2 years, and it's
not enough time. That is not enough time.
Well, for the international, it's not?
No.
Nope.
Historically, international stocks have had a decade where they've been down over the entire decade.
A guy that we think you should trust, Professor Eugene Fama, would tell you any performance under 10 years is noise.
Is noise? Noise. It's just background noise. Let's just say, okay, let me just ask you a question. Maybe this will help. You sell your international today. What are you going to go into? Let's assume you sold your international stock index fund today. What would you put the money into? Where do you think it should go based on your view of the market?
I really don't know where it should go. But I was looking at this and I thought, well, damn, it's been over 2 years. Maybe I should just dump it and put it in the cash account and.
Okay. Wait, good. No, he answered the question. Hold on.
Thank you.
Oh, thank you. You said cash. All right. Now you put it in cash and the stock market goes down some more.
Yeah.
And everybody says, oh my gosh, Larry, the stock market feels terrible. Good thing you got into cash. When do you get back in?
Yeah, well, I understand what you're saying.
By the way, here's another way to look at the international portion.
And I promise he'll be nice this time.
No, I will be. The international stocks make up now about half of the value of stocks around the world. Mm-hmm. It's about half U.S., half international, basically.
Oh, okay.
So what you're doing when you invest international is you're simply spreading the money around to all these other companies. Some may turn out to be Luckin Coffee. Some may turn out to be Nokia. We don't know which ones, but you own all of them. And over time, that diversification, by the way, has meant two things. It's meant reduced volatility and it's actually improved your returns. But you got to be patient. You can't watch this even 2 years at a time because it'll do bad things to your portfolio. That I can
and your head.
Yeah. Well, you guys made me feel better. I appreciate that. And I know now. I know. So I should have, just to pick a number, not accurately, but 50% international and 50% non-international.
Yep.
And
for the stock portion of your portfolio. Yes.
Yeah, correct.
Yeah. Okay.
Okay.
Good. Thanks a lot for your time.
Awesome.
I appreciate it.
Thanks, Larry. We appreciate the call.
Sorry, and I'm sorry for being kind of flip earlier. That was a flip answer.
Oh, it was actually kind of funny.
No, it wasn't. I shouldn't treat people that way.
Yes,
I want to mention something.
Because if you do that, then it's the good cop, bad cop thing. You make me look better. And
Okay.
no, that's
I mean, 'cause
important. I think
I
that's
do it at
important.
home, and it doesn't do well here either, by the way. It doesn't play well.
It's the Laurel and Hardy, the Abbott and Costello, the Martin and Lewis sort of thing, you know?
Yeah. All right. Serious for a moment, because this is a serious
you're just going to be
topic.
serious for a moment?
A moment.
All
One
right.
moment.
All right.
Yeah, because this came up this week. It was in the Puget Sound Business Journal about how a man was indicted for siphoning about $400,000 from Boeing VIP retirement accounts.
Wait, how did he do that?
Well, this is the part that he tricked the U.S. Mail Service. He got rolled over checks, et cetera, et cetera. But here's the bottom line, okay? I don't want to get too far into this, and I hope he goes to prison for a very long time.
Yeah, me too.
But many of you are in the process of rolling over money from the VIP, right? The retirement plan at Boeing into IRAs.
There's a lot of that going on, yes.
Yeah, there is. I would suggest always in this process to have a professional help you, because this kind of thing can it's very rare, but it can happen. And for example, when we move money, we do this often for people moving out of Boeing into an IRA. Now the process is so good that it actually, they allow us to scan the checks, and that just gets deposited into your account at Schwab, period. I would always have a professional help me on this, because you don't want the wrong thing to happen as it did here. That's what my point was.
And the problem, though, in saying that, is the dilemma that faces all investors who are looking for help. How do I find that good professional? And that really is a problem. And we understand that that is a problem. I mean, that's why I made a video on how to find a fiduciary advisor that you can find at TalkingRealMoney.com. That's why we have a whole section of Talking Real Money devoted to helping you find the right advisor. And by the way, you will find that our help does not point you directly to us. It's not like, go to that and, go to Vestory. No, that's not what we tell you.
That said, I will promote briefly our class coming up on the 29th, which is a webinar. It's online. It's 8 o'clock in the morning, July 29th, that will go right to the point that Larry just raised. How do I invest the money I have in stocks? How do I invest that? We think there's only one way. That's to be widely diversified, keep your costs low, and then rebalance at times when needed to make sure you keep the percentages correct. And we're going to go into why we believe that, where we came up. This isn't something that Don and I developed at his kitchen.
Well, you haven't seen the new one. I'm just making it up as I go along.
Well, no, I mean, the class might have been that. I'm making it up as I go along. That's
I'm just
good.
making new stuff up.
Glad I'm listening.
I'm like Stansberry. I'm just going to say
Exactly.
it's science. Hey, it's science.
It's over for America. Move it all international. It makes sense. Buy the international and the gold. But we'll show you the academic work we think you should trust, not the ideas that people come up with, because they do come up with ideas every day, right? They do.
Most of them bad.
Right. Most of them bad. Most of them going to cost you. And so this is not a time to be selling based on those ideas. The idea here is truly to trust the work of academics that makes sense.
By the way, we're like Santa Claus in Miracle on 34th Street, where he sends the kid to Gimbels to get the toy. We list other advisors who we believe should, or at least supposed to act like us. Has a single one of them called and thanked us yet? I don't think so, not one.
Don are talking real money.
If you're sick of your self-interested financial advisor and are looking for a 100% fiduciary, low-fee investment advisor, call my firm, Vestory, at 800-386-3004 or visit us at vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
That was actually a really fun couple of hours doing the show, which will be turned into 2 podcasts next week, which you can go and listen to at TalkingRealMoney.com, along with the new podcasts we make during the course of the week. So check those out, and also check out our class coming up on the 29th of July, the new Science of Real Retirement Investing, or something to that effect. It is free, and you can sign up at TalkingRealMoney.com. Click the events button, TalkingRealMoney.com.
We hope you realize advise that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.